Hey guys, welcome back. In this video, we are talking about how liquidity is down and AMC is up, how shorts are buying, the AMC recovery, and many more in this video. So one thing you'll notice is that the reverse repo was going down, and AMC is going up and up. So what you'll take a look and what you can see is that the reverse repo is at $67 billion right now. And when you take a look at AMC's price, you actually see that for the past few days is obviously going up. And when you make the relationship between the reverse repo and AMC, you understand there are many times where both things has coincided with one another. One thing to note first is that when the reverse repo first had its run to $2 trillion was at the start of 2021 when the whole thing happened with AMC and GME. And this was one of the biggest reasons for why we saw this suppression of AMC all the way down here. And you can see as AMC right now is faced with the reverse repo going down, you're seeing how the price is actually going up. And so that's what we talked about with understanding how the liquidity that these institutions have access to is extremely important for the price discovery of AMC. The less liquidity they have, the price will get. The more realistic, the more price action there will be, the more reflection of price there will be for AMC. And that's what we are seeing right now. Now, of course, that isn't the whole reason. But one thing to note is that the reverse repo is going down. Another thing to realize is understanding that shorts and institutions are buying AMC. So AMC institutional ownership continues to increase. Many are quietly buying long at the fake bottom. Meanwhile, the embedded X actors avoid mentioning buying AMC under $4 at all. Institutions now own 39.11% of AMC float. Do you believe retail only holds 60.88%? So you can see where they're saying what the current institutional ownership percentage is. And now what we see is that firstly, institutional ownership is going up. Now, whether it's 40%, I personally don't believe it. I do believe that potentially if you count in for all the synthetics, maybe 40% is owned by institutions. But when we talk about the actual flow, the limited amount of shares that are existing out there for AMC, I believe that over 90% is held by the retail investors. What you can also see is that the number of institutional buyers, and many are currently buying under $4.50 per share. So this is what we've talked about with understanding that institutions are buying into AMC. Now, there are multiple reasons for why they're buying into AMC. When you take a look at the fundamentals, you know that AMC is doing well. When you take a look at a broader look, firstly, the box office is only going to get bigger. And then when you narrow it down and you take a look at who's really going to perform the best when the box office goes up, well, it's very likely to be AMC. First, we've seen how they increase their revenue streams. We've seen how they're investing their money. Another thing is we know how much foundation in terms of support they have. And so AMC, when you think of investing into the whole theater industry, AMC, for me at least personally, and again, this may be a biased opinion, I do believe that AMC is best investment when you take a look at all the risk reward, when you take a look at all the fundamentals, etc., etc. And this is why shorts are buying. This is why institutions are buying. Another reason is obviously because they understand the squeeze factor of AMC and hence why they're buying. Because when you take a look at this, AMC shares are trading higher after Goldman Sachs disclosed a 6.5% stake in the company, driven by a positive outlook on box office recovery and strong film slate for 2025. Now, a few points I want to talk about here. So what we're seeing is, of course, Goldman Sachs buying in, and a 6.5% stake is obviously a large amount. Now, I don't want to say that the reason for why AMC is up is because Goldman Sachs have bought in. Because again, it goes back to what we talked about. The large majority of AMC shares has already been bought up by the retail investors. Retail investors does not care if it's Goldman Sachs buying. They don't care if it's JP Morgan buying. They don't care whoever is buying. These people, these investors, they only care about what they see. They care about what the community thinks. They don't care about, what these other institutions are saying. And so that's why when I see this in terms of about how AMC price is only up because Goldman Sachs disclosed a stake, I don't personally think that's the reason. But what it does show us is, again, going back to what we talked about earlier in terms of how institutions are willing to buy into AMC. Because one thing we know is that Goldman Sachs have actually been spoofing AMC. So the very fact they've bought 6.5% is obviously a very interesting thing. And another thing that they're doing right now is, again, this is why, like I said, you have to take in all perspective. Goldman Sachs increases put position on AMC. So whilst they've longed on AMC, they've also hedged their position by buying puts. Now, the takeaway I want to get away from this is the fact that they're willing to buy shares of AMC, but only puts of AMC. And I think that overall, they are still net bullish. So it really gives us a consensus of what they think about AMC, what these short institutions, what these institutions who once wanted AMC to fail now think about AMC. Because remember, when you bought 6.5% of AMC in terms of shares, you obviously believe that there's a long-term value. The only reason why you buy put and not short AMC is that you obviously want to protect yourself. And so in terms of if they bought calls of AMC, but then they bought, they're shorting AMC shares, and so the whole situation is flipped, then I believe that the net outlook for AMC is bearish. But the very fact that they bought shares in terms of long AMC and then put in terms of short term is that they believe AMC in the long term will go up, but they want to protect themselves with that downward protection. And so still they're overall net bullish on AMC. And you can also see is that what other people think. Now this is from Biotech, but I believe that this is showing what most people would think for AMC. Is that if Goldman drags AMC back to $3, I will load up on shares. Many institutions have already jumped in long at $4 to $5 recently, and they aren't in AMC at this level to lose money. And so, like I said, it speaks for most investors. They don't care what institutions are in AMC. They only care in terms of what they know and what we have seen. We understand that there is still manipulation. We understand that AMC is still good investment. And so no matter what price AMC at, as long as we see it's a good investment, we're obviously willing to be buying in. And that's what Biotech thinks. That's what multiple people think. That's what majority of people in the AMC community thinks. As always, this is a financial advisor. Do take our Instagram so make sure you do your own due diligence and research. But it really just shows us, how good the community is. And you can also see here, we're getting to the point where even the pathetic shows at MarketWatch have to acknowledge what's coming for AMC. Revenue and profit. And you can see AMC poised for multi-year recovery, fueled by strong 2025 firm slate, says analyst. So not only are Goldman Sachs buying into AMC, and we just talked about how all these other institutions, we know that the overall outlook for AMC is extremely bullish. We're seeing how the box office are recovering, and we're seeing how the box office are even going to newer heights. We know exactly how AMC operates, and this has been covered in my videos multiple times in the past. We have the earnings coming up very, very soon, as you guys can see. And so that will obviously gives us an even clearer idea of what to see. But it's to really understand right now that we, again, along with all these other institutions, realize the opportunities, the potentials that are on AMC, and hence why people are buying. And so with the liquidity going down, with these capital, with these margin going down, we're seeing why AMC is obviously seeing that increase in price. Another thing is obviously when you take a look at the technical factors. Now, I've already covered this in the previous videos. Technical analysis for some people is obviously very important, and if you day trade, swing trade, or whatever, you will obviously use technical analysis. And when you take a look at the technical analysis for AMC, you always see that it's extremely bullish. It's always ready to break out. And so again, just like we're seeing here, the technical analysis is bullish for AMC. But the reason why we don't focus on the technical analysis as we would for others is that one of the biggest reasons for why every time we see these breakout forms for AMC, why we don't actually see the breakout happen is because it's being suppressed, it's being pinned price down. And so what we can't see, what we can't then use and rely on is the technical analysis we can for other stocks. But it still gives us an overall understanding of what the sentiment is for AMC. And that's why it's very important. You can also see, and this is why, like I said, why technical analysis doesn't work as well for AMC and GME is because when we see these breakouts happen, you will see the orders come through. And we are seeing it happen for AMC. We are seeing it happening for GME. But what you will mostly see is that the 881,000 GME sell order hit lit market, but split up a near equivalent buy order into 4 parts and only send a quarter of it to the lit market. So what you will see is that you can see these orders. Now, this is coming in, so 881,000, and it hit NYSE. So it hit lit exchange. Therefore, it will have an effect on the price of GME. Now, what we also have is an equivalent of 880,000. Now, if all of these orders were to hit the lit exchange, it will obviously negate the sell order that we saw here. So therefore, it wouldn't have a bullish nor bearish reaction because it was net neutral. But they only allowed 259,000 through into lit exchange, the rest in the dark pool. And so therefore, the net is still actually bearish. And so you can see, even with the same amount of orders, there are more bearish pressure because of how they abuse the dark pool. And that's why we can't see real price reaction on AMC and GME. Anyway, guys, thanks for watching. I'll catch you guys next time.